Imagine waking up, checking your phone, and seeing that you just got paid. Not from your job, not from a side hustle, but just for owning stocks. Sounds crazy, right? But that's exactly how dividend investing works. And today I'm going to break it down so simply that by the end of this video, you'll know exactly how to start. Before we dive in, quick disclaimer. This video is for educational purposes only and not financial advice. Investing involves risk, and you should always do your own research or talk to a financial advisor before making any decisions. Welcome to Simplified Finance, where we make money simple. If you've ever wondered how people earn passive income from stocks or how to build wealth without constantly trading, then this video is for you. Let's start with the basics. A dividend is simply a payment that a company gives you just for owning its stock. Think of it like this: imagine you own a small food business with your friends. At the end of the month, after making profits, you all decide to split some of that money. That payment you receive, that's basically a dividend. Now, instead of a small business, think of big companies that make billions of dollars. When they make profits, they sometimes share a portion of it with their shareholders. That's you here, where it gets interesting. When you buy a stock that pays dividends, you own a piece of that company, and the company pays you regularly, usually every 3 months. So let's say you own shares in a company that pays $1 per share per year. If you own 100 shares, you get $100 per year just for holding the stock. No extra work, no selling. That's passive income. Think of dividend stocks like rental properties. A rental property gives you monthly rent, and a dividend stock gives you regular payments. The difference is you don't have to fix anything, deal with tenants, or manage the property. Dividend stocks are like owning a fully automated rental property that pays you without the stress. There are 3 main reasons people love dividend investing. First is passive income. You get paid regularly without selling your investments. Second is stability. Companies that pay dividends are usually well established and more reliable. Third, and this is where it gets powerful, is compound growth. When you reinvest your dividends, you buy more shares, which then pay you even more dividends, and then you reinvest again. It's like a snowball rolling downhill, starting small but getting bigger over time. Let's make this real. Say you invest $1,000 in dividend stocks with a 4% annual yield. That means you earn $40 per year. Now if you reinvest that $40, next year you're earning dividends on a bigger amount. Over time this keeps growing. Fast forward 10 or 20 years, and suddenly you're earning hundreds or even thousands per year in passive income. If you're a beginner, here's exactly how to start. First, open a brokerage account using beginner-friendly apps like Robinhood, Fidelity, or Charles Schwab. Second, look for dividend stocks or ETFs. Instead of guessing, beginners can start with dividend ETFs that include multiple companies. Third, check the dividend yield. This tells you how much income you'll earn compared to your investment. And finally, reinvest your dividends. This is key. Turn on automatic reinvestment if possible so your money keeps growing without extra effort. Before you jump in, here are a few mistakes to avoid. Don't chase extremely high dividend yields, because if it looks too good to be true, it probably is. Don't put all your money into one stock, always diversify, and don't expect quick money. Dividend investing is a long-term game. Dividend investing isn't about getting rich overnight. It's about building a system that pays you for years. If you start today, even with a small amount, you're already ahead of most people. If you found this video helpful, hit the like button, subscribe to Simplified Finance, and turn on notifications so you don't miss the next video. And if you want me to break down the best dividend stocks for beginners, drop a comment and I'll make that video next. And that's it for this video. I will see you in the next one. Thanks for watching.